everybody. I am got a little bit of time today, and so I'm going to show you a big mess. And then hopefully, let me see if I can tilt my monitor up because this is, oh, what a pain. Hang on. Well, anyway, I'll get back to it. I'm going to show you a big mess here, and then I'm going to show you some of the analysis that you can do and hopefully weed through some of this and actually make something productive out of this. But basically, I'm looking at this on the 8 range bar. So if you understand range bars, you're going to have to do a little bit of research on it and look it up because I'm not going to take a lot of time to go over it here. But I'm trading the Euro USD. This is basically a day trading type strategy, and I'm using ratio and structure analysis. Now, if you're looking at this chart going, holy smokes, that looks like a mess, don't worry about it because it gets messy as you start doing it. But basically, all I wanted to do was make sure that all the ratios lined up correctly no matter what the market decides to do. And I'm going to show you a couple of trading opportunities that exist right now on this 8 range bar. Now I'm going to go ahead and first I'm going to clear off my entire chart here. All right. And then I'm going to draw this stuff in, and it's going to make a lot of sense when I do it, and then when you go back and try it, it's going to be utterly confusing, but that's okay because that means that you're learning something. So go ahead and be confused and enjoy being confused because it means that you're about to break into some new knowledge that you didn't yet possess. But what I'm going to do here first is this is nothing but a series of Fibonacci retracements and extensions. And the first thing I'm going to do is look at this leg right here. So I'm going to draw swing low, swing low to swing high. And I'm actually going to turn my little cursor deal back on because it helps me. And as I see, the retracement here came right into a 618 retracement. That's good. That tells me that we may have a Gartley pattern setting up. And those of you who have been through the Founders series are going to recognize that right away. And of course, those of you who have been through the Pro Trader course are going to recognize that. Then again, we have a 618 retracement. So what we've got here, if I clear this off and I just draw in some lines, is we've got a potential Gartley pattern setting up. Okay? And what I would expect now is to see this market run down into a 127 extension right down there. Now it just so happens that the way these ratios line up that I'm also looking at about an 886 ratio confluence with that. Now, for those of you who are familiar with Gartley patterns, we normally look for a 786 127 ratio confluence, but it's not that important with this because what we're looking for is a little bit of harmonic and ratio confluence here. So I have 127 886 ratio confluence, and now if I go ahead and bring in an inverted Fibonacci extension from the B to C leg, bring that in, what you're also going to notice here is that I also have 1414 ratio confluence with that as well. So it may be hard to see, but I have a 1414, a 127, and an 886 ratio confluence here for a completion. And actually, if I go ahead and copy this line, if I can grab it here, I may not be able to grab it all, but basically down into an ABCD pattern completion at about that 886. Now that's going to be a buying opportunity. That traders is 133.43, probably 133.46 is where that long entry would be. And stops can go right below these lows here. So the lows come in at about 32. So we go 27, 26 with our stop, maybe 24 just to get underneath the halfway point. So stops at 24, very very tight stop, and then we'd look for a press back up into somewhere around 3390s, 3400 even. So that would be option number 1, and that's the first thing that I looked at when I saw this trade. But there's also something else going on here. If we kind of collapse our chart up a little bit, take a look a little bit closer, we're also going to see X to A, 618 retracement, then another 618 retracement back down in here for a potential move into a 127 extension. If I invert this Fibonacci level here, you're also going to find again that we have our 1414 ratio confluence right there at the 127. So now we have again another area where the market is likely to reverse. So we have a potential move here. Oops. Cancel. up into this 127 extension here, and this creates again another Gartley pattern. All right. So it doesn't matter what I'm getting at, traders, is it doesn't matter what this market does. If it goes up, if it goes down, I've got a place where I'm going to buy or I'm going to sell into ratio, structure, and harmonic confluence, and you know, where all those meet up. That's what I'm looking for. That's what I want to see. And so again, on this 8 range bar, that one's 134.50s roughly, 134.49 for a potential shorting there. And then I'm going to go ahead and post this out just to have it out there. And I don't know whether either one of these would work out. You know, I've just identified the pattern. But I get a lot of traders who ask me, well, Jason, you know, don't those ratios and don't those harmonic patterns, don't they only work on the higher time frames, or don't they work better on higher time frames? And the answer is no. This is not even a minute chart. This is a range bar chart, and there's potential opportunity here where the patterns are forming up and gives us trading opportunities. So don't think for a minute that you can't take this same strategy and use it in a day trading environment. I do have some really exciting news starting in January. Akil, who is has become a friend of mine and who was a former client of mine, has stated that he would like to run a ratio room, that he he's excited to be able to do that and to share that with you guys. So for those of you who are interested in learning more about this and seeing this actually done day in and day out in a live trading environment, well, then the ratio room is for you guys, and that'll be coming in January. So be on the lookout for more information on that. I don't see any reason to start it before the first of the year, because that would seem to be a bit of a waste. But keep this in your hip pocket. Watch it a couple of times if you need to, but this is just a couple of different strategies that you can use on a day trading time frame to identify key trading opportunities that exist. So thanks a lot, guys, and I'll talk to you soon.